Hello guys, and welcome back to another deep dive analysis video, and today we're going to be running through my qualitative and quantitative analysis over Airtel Africa, the FTSE 250 telecommunications company, and at the end of the video I'll provide you with my opinion on what the company is worth following my intrinsic value calculation. Now, a lot of people think that the market is currently really overvalued, and I don't necessarily think they're wrong when they say that. But there are a lot of companies which are severely undervalued and you can make a lot of profit from in the long term. And I think that the numbers behind Airtel Africa look really interesting. So without further ado, let's get into the video. Okay, so as always guys, we'll start off with a little bit of qualitative analysis first and then we'll dive into the numbers. So Airtel Africa is a British multinational company that provides telecommunications and mobile money services in 14 countries in Africa. It's headquartered in London and is majority owned by the Indian communication services company Bharti Airtel, who actually own around 67% of the stock. So as of September 2020, Airtel had over 116 million subscribers in the continent. So the first thing that I'm thinking there is that there's a lot of the market which they do not currently have access to. So there are over 1.3 billion people living in Africa. And although not everybody has access to mobile phones, that is a number which is consistently growing, and we'll get onto that later on. But straight away, this suggests to me that there's a large market which they aren't yet tapping into, which is good. It shows a potential for growth. So just moving on to management, we have Raghunath Mandava, who is the current CEO. He worked for Bharti Airtel initially for 13 years, making his way all the way up to Chief Operating Officer before moving across to Airtel Africa as the CEO. And he has been in that position for the past 5 years. He managed to turn the business into a high growth and profitable company, so he's done really well there. Unfortunately, he did announce this year in April that he'll be leaving in October, but he will be succeeded by Olusegun Ogunsanya, and he has a vast amount of experience. So I've noted here that he has 25 years of management experience in banking, consumer goods and telecommunications. He joined Airtel in 2012 and has had leadership roles in Coca-Cola, Ghana, Nigeria and Kenya. So he's very experienced. So I'm not too concerned with that transition. And actually, I think it could be quite good for the business potential. So moving on to insider holdings. So Raghunath holds just under 500,000 shares in the company, which is around £400,000. Personally, I would have liked to have seen a greater holding than that. But given that he is retiring shortly, I imagine he's had that decision in mind for quite a while, so it's not too concerning. In terms of Olusegun, who is succeeding him, I'll be looking out to see whether there are any insider transactions over the next couple of quarters, just because I like my management to be holding shares in the company that they are managing, so that our values are aligned in terms of shareholders and management. So just while we're on the topic of shareholdings, I think it's important to mention that there was a press release on the 14th of April which stated that there was an institutional seller that had sold 50 million ordinary shares in the company at a price of 75 pence per share. And that was done via an accelerated book build. Now, there could be a number of reasons as to why this institutional holder has sold out on these shares, but in terms of why they were sold at a discount, it's because of the method that had to be used in order to get rid of the shares. So the daily trade volume of Airtel Africa's shares are around 2 million shares traded per day. And they wanted to get rid of 50 million shares. So you can imagine that if there was 50 million shares worth of selling pressure to the stock, the stock price would have just plummeted. So they had to do it via this method. So it's not necessarily a concern that it was done at 75 pence per share. So following that, the Airtel Africa share price did plummet down to around 75 pence per share. But I don't think it's something really to be concerned about. Okay, so moving on to the risks. So one of the risks for me is that Airtel Africa has quite a poor balance sheet. So Airtel Africa currently have a current ratio of 0.6, which is concerning as it means that they do not have enough current assets to cover their current liabilities. And the outcome of that is that the company is likely going to need to raise capital either through debt or equity. And both of those things are likely to harm shareholders' returns. And that does turn out to be the case, as we can see here, that on the 21st of April, Airtel Africa announced the successful signing of a new $500 million loan facility with a group of relationship banks. Now, the one thing that I do like about this deal is that it uses a revolving credit facility. Now, if you don't know what that is, effectively it is a pool of cash which is available to Airtel Africa as and when they need it, but they will only be charged interest on the amounts that they do use. So if they find themselves in a better or a stronger financial position later down the line, they won't be charged interest on the full $500 million, which is good. Another risk that I've noted down for Airtel Africa's business is currency risk. So although Airtel Africa report in US dollars, their revenues are earned and thus cash received in the various African currencies in which they operate. and therefore they're exposed to foreign exchange fluctuations in these currencies. In other words, if the value of these African currencies depreciate against the dollar, that is going to hurt Airtel Africa's business in terms of the revenues and profits which they earn. And I've got an image here just to show you the potential impact of these currency depreciations. So we can see here that between 2017 and 2018, the Nigerian currency depreciated by 16% against the US dollar, and the Angolan currency depreciated by 47% to the US dollar. So you can see how that would impact revenues and profits earned by Airtel Africa. On the other side of that, if the African currencies appreciate against the US dollar, then you'll see an uplift in revenues and profits. So it does work both ways. Now, management can actually mitigate the risks of currency depreciation by using derivatives, but you can never eradicate the risk, so the risk will always remain. And then another risk I've noted down here is COVID-19. So Africa has been hit hard by COVID-19, and whilst much of the Western world has been receiving vaccines and it looks like we're getting back to a sense of normality, it's not the case for many African countries, and I think that they are still going to be impacted hard into 2021 and beyond due to COVID-19. And actually there's a publication here that states that the bank estimates that African governments need additional gross financing of about $154 billion carrying through into 2021 to respond to the crisis. So of course that's going to hinder economic growth for the continent. Okay, so shifting onto the quantitative analysis. Before we get into that though, I just want to say that Airtel Africa have a year-end date of the end of March, and so they haven't yet reported their full year results. I think they'll actually be reporting on the 12th of May, I believe. And so therefore I only have the 9 months to the end of December to work with. So what I've done is I have extrapolated the 9-month results out onto the full year to give me a picture for the full year, because I want to make sure that I'm incorporating the 9 months worth of results which we've already had. But just as a sense check to that though, I have compared my results or my expectations for their results for the full year with analyst expectations. So just to run you through that sense check of my expectations versus analyst expectations for the full year results, I'm expecting revenue of 3.8 billion and analysts are expecting 3.8 billion. Analysts are expecting operating profit of 1 billion and I am expecting operating profit of 1 billion. And analysts are expecting net income attributable to shareholders of 273 million. And I am expecting net income attributable to shareholders of 275 million. So although we will have used different approaches, our results are the same. And so I'm more than comfortable to use that final 3 months of extrapolation into my forecast going forward. In terms of 1 to 5 year revenue growth, I've gone for 9%, and I think that this is really conservative. So if we look to the results for the 9 months ended 31st December 2020, they reported revenue increase of 13.8% for those 9 months. And actually looking at Q3 2021 in isolation, they reported revenue growth of 19.5%. So I am using revenue growth for 1 to 5 years of only 9%, which is half of what they saw in Q3 2021. So I think that's very conservative. I don't think there's any arguments there. Revenue growth for 6 to 10 years, I've just decreased that slightly just because as companies get bigger, they tend to grow slower. So I think that's fair as well. For gross margins, I've used the average of the previous 5 years. Now, gross margins are actually increasing slightly. They're on an increasing trend, but I'd rather be conservative and leave it at 58%. For operating expenses, I've used 37%. And again, it looks like operating expenses are actually decreasing, which is leading to margin expansion. But again, I'd rather be conservative, so I've used 37%, which is the average of the 5 years. For free cash flow as a percentage of revenue, I've gone with 13%. And actually, that is the average of the last 5 years. But we can see that in, I think, 2016, they only had 4% in revenue, free cash flow as a percentage of revenue. So I think that 13% is fairly conservative, considering 3 out of the remaining 4 years were greater than 13%. And I think 16% would probably be a reasonable assumption as well. For terminal growth, I've used 2%. Now, considering that the African economy is set to grow at around 3.5% to 4% per year, I think 2% is more than conservative, so I'm happy to use that. For weighted average cost of capital, I've calculated that in this box over here. Current net debt, I've taken from the most recent quarter of financial results. So in terms of the tax rate, this one was a little bit more difficult. So if we actually look at their previous tax rates, we can see some negative values here. And so it's just not consistent at all. In terms of what those negative rates are, it's likely that they had a deferred tax asset. So that's why they were receiving money from the government in terms of taxes rather than paying it. So it wouldn't be fair to include that in our forecasts going forward. So what I did instead was go to the corporate tax rates tables for the last 11 years and took the average of these, and the average of those was 28%. So I think that it's probably fair to use 28% going forward. That brings us on to the three key metrics that I like to look at when analysing a business, and that is revenue growth, earnings growth, and free cash flow growth. So revenue growth looks fairly steady, and it doesn't look to be plateauing at all, so that is good. Earnings growth, with the exception of 2017, which was a loss-making year, looks pretty strong as well. And then free cash flow growth shows a general uptrend as well. So I'm happy that Airtel Africa passes my tests of revenue, earnings, and free cash flow growth. So that all looks very positive. Just before we discuss the outputs of the cash flow model, it's important to note that these results and these forecasted results are in US dollars and the share price is in British pounds. And therefore we need to take that currency exchange into consideration, which is what I have done by dividing the total net present value by the historical USD to GBP rate, which is 1.45. So from the discounted cash flow model, I get an intrinsic value of £1.42 per share, which is a significant upside compared to the current share price. Now moving on to the earnings multiple approach, I've said that the expected PE ratio in 10 years is going to be 12. So I think that 12 is quite conservative. So I've looked here at what the PE ratio is for the telecoms industry in the United States, and we can see a trailing PE ratio for the telecom services industry of 22. Now I've taken into consideration the fact that US companies tend to trade at a premium compared with UK companies, and also the additional risk of investing in a company that operates in Africa. And I think that investors are going to want a higher return on their investment as a result, and therefore willing to pay a lower price to earnings multiple. So I've used 12. The average for the US industry is 22. So I think that's fairly conservative. In doing so, it gives us a price per share in 10 years' time of £2.13, which when discounted to today is a share price of 89p. And when we take the average of these two methods, we get an average estimated intrinsic value of £1.15, which would leave us with a margin of safety of 44%. So potentially significant upside in Airtel Africa. Now, I do think, for the reasons mentioned in this video, that Airtel Africa is a riskier investment than some. With that being said, I think that you are heavily compensated for taking that risk with a margin of safety of 44%. And I think that you'll struggle to find that margin of safety elsewhere, which makes this a very compelling investment proposition indeed. So that is all for today's video, guys. I hope you have enjoyed it and found it useful. It took me a little while to put the video together and doing all of the research for the video, so I'd really appreciate it if you hit the like button to show your appreciation for that. And until next time, guys, thank you.